Good morning and happy Monday, everybody. Today is October 16th, 2023. New week is upon us, and the week is off to a pretty good start. Stocks are up this morning on what? I don't know. We got earnings from Charles Schwab this morning. Mildly beat some very low expectations by just a couple of cents. Charles Schwab reported adjusted earnings per share of 77 cents. That's on expectations of 75 cents. Revenue was a miss, but the big story with Charles Schwab is that their deposits continue to leave the financial services company, kind of bank, investment bank, whatever you want to call Charles Schwab. The business model is basically a bank, and deposits dropped by another $20 billion last quarter, down from about $300 billion to $280 billion. This is down from about $395 billion a year ago. So while the rate of deposits leaving the bank have slowed, they are still leaving the bank. And that's important because what does Charles Schwab do with your money when they get it? Well, like most banks, they buy things with it. They make loans, they make margin loans, or they buy U.S. Treasuries. Well, U.S. Treasuries have not been performing so well. As interest rates have been rising all throughout the year, that's U.S. Treasuries values going down. And so the problem is, as these deposits are leaving, Charles Schwab is having to sell assets at a loss in order to meet those withdrawals. And the worry is, when will they be able, or the worry is they may not be able to meet those withdrawals someday. Well, that day is not today. Charles Schwab stock was actually up the last I looked. I can't imagine why. Elsewhere going on in the markets this morning, we've got Rite Aid has filed for bankruptcy. All right, they're bankrupt. Maybe their stock is probably going up too, because why not number go up? Rite Aid is just the latest in this long line of pharmaceutical companies that is trying to duck their responsibility for the opioid crisis, hiding in the bankruptcy system in order to avoid making that payment. They filed for Chapter 11 this morning. They are joining Purdue Pharma, Endo Pharma, and Mallinckrodt, basically the architects of the opioid crisis, by hiding in Chapter 11 bankruptcy, where legal judgments are treated as unsecured creditors. Isn't that nice? The people who own their bonds, they get paid back. The people whose lives they destroyed, or the people who lost loved ones, they get nothing. Isn't that nice? And Janet Yellen is back in the news. She was making sound bites yesterday in an interview with, I believe it was Sky News, saying that, you'll be glad to hear this, the United States can afford two wars. Isn't that nice? As we're sitting there watching this circus play out in Congress, where they can't even choose a Speaker of the House because Congress is basically this dysfunctional gaggle of children, and the country is essentially bankrupt. You know, we can still print money into existence and borrow it from ourselves. Somehow that works. Well, Janet Yellen is saying it's okay. We need to go ahead and just put some empty suit in the Speaker of the House so we can go ahead and send billions of dollars to Ukraine and billions of dollars to Israel, and you get $1 billion and you get $1 billion and you get $1 billion, and we can just do this forever and there will never be any problems, right? Right? Well, the bond market disagrees. Interest rates continue to rise. And with that, let's shrink my big melon of a head and take a look at what's going on in markets this morning. And please, guys, while we're shrinking that big melon of a head, won't you hit that like button? And if you're new to the channel, won't you hit that subscribe button? We do this every morning. We'd love you to have your coffee with the melon head. CNN's Fear Greed Index this morning is at 32, into fear territory, where it's been for about the last couple of weeks. The S&P, though, having a pretty good morning, up 22 points this morning, or about 0.5% to the upside. The Dow is up 200 points ahead of the opening bell, 0.6% higher on the Dow. And the NASDAQ is up about 0.35%, 52 points higher ahead of the opening bell for the NASDAQ. So stocks are up pretty much across the board this morning. I guess on the absence of terrible news, stocks only go up. And we don't have any terrible news this morning. The U.S. dollar is down 31 basis points at 106.34. That's down about 0.33% this morning. So the dollar is still elevated off its lows in the mid 106s. It's down pretty substantially this morning, though. We'll keep an eye on this one. But Treasury yields are also up this morning. So this is interesting. It's unusual to see stocks going up while yields are going up, but that's what we have this morning. The 30-year Treasury is up 6.7 basis points at 4.84%. The 10-year is up 6.5 points this morning, yielding 4.692. The 2-year is up 1 basis point, 5.067. And then the short end of the curve is basically flat. The 1 month is at 5.43. So we got a higher long end of the yield curve this morning. That has been a trend that's been going on for a while now. Looking over in precious metals this morning, it looks like the metals are not liking those higher yields this morning, despite the weaker dollar. We've got December gold futures trading at $1,930. That's down about $11 or about 0.6% lower this morning. December silver futures $22.76. That's down 13 cents or about 0.6%. We have got platinum, January platinum futures trading at $885.90. That's up $2 this morning. December palladium futures at $11.36. That's down about $9 this morning. And West Texas Intermediate up just 1 cent on the December futures trading at 86.36. Not a lot of news coming out of the Middle East this morning. At least at the moment, the much anticipated Israeli ground offensive in Gaza has been delayed. The story being cited for that delay is weather. Not really sure that holds water. For whatever reason, the Israelis have not started rolling yet. And the world is still kind of holding their breath on what's going to happen there. As more developments come in, we will let you guys know. Now, let's talk about the main story this morning. This is in Barron's. Charles Schwab earnings beat estimates, but bank deposits fall again. Now, you can pretty much forget those estimates because the estimates they just lower expectations every quarter so that no matter what they report a beat. Well, you're beating low expectations. Is it really a beat? Okay, I guess so. Charles Schwab on Monday reported adjusted third quarter earnings of 77 cents a share, beating analysts' expectations of 74 cents. This compares with reported earnings of $1.10 for the same period a year ago, as Schwab has faced challenges this year. Revenue fell 16% year over year to $4.6 billion, while adjusted net income dropped 31% to $1.5 billion. Those are some pretty awful numbers right there, guys, because banks are supposed to do better in a high interest rate environment. When interest rates are up, banks are supposed to be able to make more loans and charge a higher interest rate for those loans. And so they're supposed to do better. But revenue falling 16% year over year, it's hard to make loans if your customers are pulling their money out of your bank. And that's exactly what's happening at Charles Schwab. Schwab's bank deposits, which have been a concern for investors, fell again to $284.4 billion. That's down from $304.4 billion for the previous quarter and down from $395.7 billion for the same period a year ago. So, guys, this bank has lost a quarter of its deposits in the last year. That is a bank run any way you look at it. Just because it's taken a year, it didn't happen all overnight. And again, another $20 billion down this quarter. So this is an ongoing thing. This is not something, we had this little crisis in March and Janet Yellen said, don't worry, our banks are strong and resilient and well capitalized. And okay, yeah, that's great. Now that's over, on to number go up and the markets only go higher. No, that's not what happened. The banks are still losing money, guys. Well, they're not losing money, but money is being withdrawn from the banks. Yeah, they're earning money, 77 cents a share, but that's down big. And as they're redeeming these deposits, as people are pulling their money out for whatever reason, whether it's the cost of living, money going up in smoke, people are losing money in the markets, whatever. For whatever reason, they're pulling money out of Charles Schwab. Charles Schwab has to sell their investments, either their loans or their bonds, in order to meet those withdrawals. Those investments are not worth what they paid for them. The company has had a difficult year. Schwab stock, which plunged during March's regional bank crisis, is down 38% so far this year. However, shares of Schwab were up 0.39% in pre-market trading and changing hands at $51.80 a share. Schwab has been buffeted this year by cash sorting, a process by which customers move uninvested cash from low-paying bank accounts to higher-paying options like money markets. Schwab's bank deposits have fallen consistently for several quarters this year, and the company's Schwab's expenses have risen because when deposit outflows exceed cash on hand, it has to rely on costly funding sources to fill the gap, such as federal home loan borrowings. Those FHLB borrowings, they typically come with a pretty hefty price tag, something like 5.5–6% interest. Executives have said cash sorting is abating, and there is signs of it. For example, FHLB borrowings fell to $31.8 billion from $41 billion in the prior quarter. CFO Peter Crawford said Monday that September bank sweep deposits increased month over month for the first time since March of 2022. So Schwab wasn't really a good report by any measure. However, look at the stock pre-market. It's up 0.5% at 51.55, up 22 cents. So I don't know where the optimism is coming from Schwab's investors, but until those deposit outflows start to reverse, I wouldn't be optimistic about this one. But hey, what do I know? I am just nobody special. Also going on this morning, Rite Aid files for bankruptcy amid slowing sales and opioid litigation. This is another pharmaceutical company that's in trouble, guys. Basically, all the big pharma giants are in trouble. Their business models are failing. Some of them are trying to pivot in the healthcare-oriented business more so than just filling out prescriptions. But Rite Aid is a big one. The drugstore chain Rite Aid filed for Chapter 11 bankruptcy protection in New Jersey. It also appointed Jeffrey Stein as the new CEO to steer the company through its restructuring plan. The company has been grappling with slowing sales, mounting debt, and lawsuits alleging it contributed to the nation's opioid epidemic. Rite Aid faces steep competition from its rivals, which have leaned into healthcare models to offset losses from its retail business. And guys, I just want to draw attention here to lawsuits alleging it contributed to the nation's opioid epidemic, because sometime in the mid-2000s, our healthcare companies, our insurance companies, our pharma companies, all while telling us, don't worry, they were making healthcare more affordable. You remember that? Remember how affordable healthcare was going to get? Well, at some point, they realized there was a lot more money in turning us into mindless drug addict zombies who are hunched over on the side of the road versus actually treating our disease. And Rite Aid was one of the companies that was elbow deep in this stuff, along with the pharmaceutical companies that were pumping us full of opioids while lying to us about how addictive they were. When they were obviously addictive, they continued to deny it. They found unethical doctors that were willing to write prescriptions and rubber stamp them. They found pharmacies that would even mail this stuff to people, and they turned hundreds of thousands of people into drug addicts. And now they're all being held liable for it in court, and for good reason, because they are liable for it. They're all using the bankruptcy system to hide from it, because court judgments are viewed as unsecured creditors when these companies go bankrupt, which means they're in the back of the line to get paid back. So the people who own the bonds, they get paid back. The people whose lives were destroyed by this unethical practice, they get whatever's left over. Now, they're saying there's going to be money left over to pay for unsecured creditors. We'll see. Look for this one to be challenged in higher courts, guys, especially the Purdue and the Endo and the Mallinckrodt bankruptcies. There's a lot of push to get these bankruptcy plans thrown out in the higher courts right now, because these companies are basically just saying, well, okay, we turn millions of people into drug addicts, and go walk around any city in the United States and you can see it, guys. Now, I'm not saying they are the only ones who did this, right? We had the reason for the conditions in American cities are many, but one of them is the opioid crisis. And these companies got rich off of that. And now they're being held responsible, and they're just saying, oh, well, we're out of money, bankrupt. Sorry. And then they're reorganizing. They're back in business the same week under a different plan. They never had to write a check to any of the people whose lives they destroyed. So look for this one to get challenged in court, along with some of the other pharmaceutical companies. I got to get off this topic because this one, I'm getting verklempt. All right, let's talk about another one that makes Jack's blood boil this morning. Janet Yellen says we can certainly afford two wars. That's a U.S. Treasury Secretary. Don't worry, guys. Forget the whole banking crisis. Forget the whole inflation thing. Forget that smell when you walk down any city in the United States, walk down the streets. You can smell the prosperity, right? I didn't know prosperity smelled like that. Janet Yellen says, no problem. We can afford two wars. Forget the two wars we just got out of. Let's walk right into two more. Sure. In an exclusive interview, Janet Yellen urges Republicans to appoint a new House of Representatives Speaker to enable greater financial support to be agreed for both Israel and Ukraine. Pay attention to that last part, guys, because this circus that's going on in the House of Representatives right now, and it is a circus. Republicans can't even choose a leader among themselves. What's going to happen as soon as that is over? They are going to rubber stamp a massive military spending package for Ukraine and for Israel. And don't be surprised to see them throw Taiwan and the southern border in there also. And regardless of your opinion on any one of those individual issues, the fact is, look at the bond market right now. The U.S. government is borrowing too much money, and it is bankrupting everyone. Corporate bankruptcies are on the rise. Interest rates are on the rise. The housing market is frozen. Why? Because the demand for money is greater than the supply right now. Yeah, that has something to do with what the Fed is doing, but it's got a lot to do with what Janet Yellen is doing. She's flooding the market with Treasury supply. She's creating too many bonds, more than there's demand for. When you increase the supply of something and demand stays the same, the price of that thing falls. That thing is a U.S. bond. And as those bonds fall, that is your 401k, your pension, your IRA, and yes, your bank is losing money because your bank puts your money into U.S. Treasuries. Case in point, look at Charles Schwab and all the money that they're losing redeeming withdrawals. So What Janet Yellen is saying is, no problem, we'll just rob the poor people even more if we need to in order to finance all this defense spending. We need a war, hurry up. Poll numbers are dropping. That's what she's saying here. And as soon as this circus in Congress is over, as soon as they are done arguing over who's going to be the leader of this governing body with a 10% approval rating, everybody hates Congress almost universally, they're just going to rubber stamp more spending. So, pay attention to what's going on in the speaker race, because the second that happens, the second that's over, the second they put some empty suit in there who is just going to slam the gavel and approve hundreds of billions of dollars for everybody at your expense, interest rates are going to start rising again in the bond market. And I just want to say thank you very much to Mr. Kevin DeBella. Thank you, Kevin. He says, thanks for your work every day. I'm a true Chicken Little, but sometimes I worry I'm in an echo chamber. Please cover your bear tattoo and make a case for why implosion isn't certain and I shouldn't pull my 401k and run. Okay, so why you shouldn't pull your 401k and run. I have not pulled my 401k and run. If you pull your 401k, you are going to owe not just the taxes on it, assuming it's a traditional 401k. You're going to owe all the taxes that you deferred when you put it in, plus penalties for early withdrawals. So you're going to take a massive haircut if you pull your 401k and run. I am not advocating that. All right. I moved my 401k largely to cash. I did not pay any taxes when I did that, and I did not pay any early withdrawal penalties. There are things you can do with your 401k, places you can put it where you can protect it from what's coming from a crash in equities or a continued crash in the bond market. I'm not going to get too deep into all the options out there, but there are options out there. You can also create a self-directed IRA, and you can put it into something like a small business that you can own within a retirement account. There are things that you can do, Kevin. I definitely do not advocate panic withdrawing from a retirement account, eating all those fees and eating all that taxes, and then putting a big bullseye on your forehead because you got $500,000 in cash sitting under your mattress in your house. I mean, it brings in all new risks. So I don't advocate panic moves like that, Kevin. But I look, Chicken Littling, it's right there. My perma bear tattoo on my arm. I get it. I don't see a lot of optimism in the fact that right now they're saying we need to just hurry up and put another Speaker of the House in place so we can real quick borrow another few $100 billion and, pour it into the military industrial complex so we can kill a few 100,000 more people. It's hard to be optimistic in that scenario, all right? The bond market is already crashing because the government is borrowing too much money, and the government is saying, no problem, we can get into 2 more wars, we can afford it. That's why I struggle to be optimistic, Kevin. I get it. But thank you very much, sir, for the super chat, the support of the channel. And thank you, Mike M., for your super chat, sir. He says U.S. debt was $32.922 trillion. That's specific. On September 12th, we are now at $33.561 trillion today, 10/16 WTF. Guys, we are in what is known as a doom loop with the U.S. fiscal situation. The higher interest rates, we are being forced to borrow even more money at higher interest rates to service the cost of that 33, 34, who's counting $1 trillion in debt. Well, if we have to borrow more money to pay the interest and the principal gets bigger, we have to borrow even more. As we are borrowing more and more, the bond market, there are no buyers in the bond market because all the biggest buyers are now net sellers. So that is driving the interest rates even higher, which is causing us to borrow even more in order to service that debt. That is a feedback loop. It's referred to as a death spiral or an insolvency doom loop. There's any number of names going on for it. Check out a guy named Luke Groman on FinTwit, has done a fantastic job talking about this. Yeah, we are in a downward death spiral, and that's why these statements like Janet Yellen saying, no problem, we can afford 2 wars. These are going to go down in history as monumentally stupid things to say. And it wouldn't be the first monumentally stupid thing Janet Yellen said, because remember, we were not going to have another financial crisis in her lifetime. Whoops, that didn't age so well, did it? Thanks again, Mike. I appreciate the super chat, sir, the support of the channel and the data points. 3 decimal point deep. Gotta love the melon heads. These guys know how to do their specifics. Steve Woitis, thank you, sir. He says, what's your opinion on oil and defense equities? I know this is not investment advice. I'm going to leave out defense equities. Just I don't like the idea of investing in defense stocks, but they're all doing fantastic. Our congressmen all started buying defense stocks a few weeks before the situation popped off in the Middle East. So, take from that what you will. I am long oil right now. I bought some call options in ERX a few days ago. I think oil is heading higher. I mentioned Luke Groman a few days ago or a few moments ago. I think oil and what's going on in the bond market are directly intertwined right now, because people pay for oil in US dollars. And right now, US dollars are getting more scarce. And as the possibility of disruption in the oil market, especially in the Middle East and fallout from the Middle East, as that grows, you could see a spike in oil prices that could actually lead to the expediting the decline in the bond market, because people need dollars to buy oil. If oil gets more expensive in dollars, then people are going to have to start selling things to get more dollars in order to pay for the oil. Well, what's the easiest thing to sell for dollars? U.S. Treasuries. And a lot of these countries hold U.S. Treasuries. So a spike in oil prices could actually lead to a big spike in interest rates as people start dumping their U.S. Treasuries to get dollars in order to pay for the more expensive oil. So I am definitely bullish oil here, Steve. Watch out for that demand destruction, though. If we do get some kind of a deflationary, massive economic slowdown, that would be demand destruction for oil, which could offset some of that spike in prices. Thank you, Steve, for the super chat, the support of the channel. And thank you, Nashville Pasta Man. If 2 wars are good, 3 would be awesome. Where is G? You know, we got 2 aircraft carriers now, or we got 1 in the Middle East and the Eastern Mediterranean right now. There is another on the way. That is 2 of our 12 carriers that are now committed to another theater of conflict. The odds, the conditions for a move on Taiwan are improving day by day as the U.S. spends all of its resources in other parts of the world, and as our fiscal situation continues to decline, and as we have obvious vacuums in leadership. I mean, look, we have nobody in the Speaker of the House. The Vice President is a freaking imbecile, and Weekend at Bernie's is in charge in the White House. I mean, guys, there is no leadership in this country. This country is rudderless. Both parties are completely incompetent, and there is nobody willing to step up and fill that void. All the people being offered up as options suck. They're even, well, I don't know if they're worse. It's hard to be worse than a dead body, but they're bad. We don't really have any good options here. So, you know, where is Xi? Xi is sitting there biding his time, building boats faster than we can build them, building missiles faster than we can build them. Now, China has their own economic problems going on right there, but the conditions for a move on Taiwan are improving very quickly for the Chinese, but they don't have unlimited time to wait either. They have their own banking crisis on the horizon, their own housing collapse that's ongoing. So things aren't really getting better for them either. Yeah, I look, the good news is we're all equally screwed. I guess that's my best attempt at optimism this morning, Nashville Pasta Man. Thank you very much for the super chat, sir, and the support of the channel. I appreciate it very much, guys. Thank you for spending your morning with us. Thank you to my Patreon supporters for everything you guys do for the channel. I appreciate that very much. Hi, Mom. Hi, Dad. I love you guys. And until next time, live small and dream big.